You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody, that music means it is time once again for the Crypto Rundown, the program where we break down what the heck is going on out there in the world of crypto derivatives, from the volatility, the volume, the unusual activity, the open interest, all that good stuff, the SKEW, you name it. We're going to talk about it here. Last week we talked about scams and legal issues in the crypto space. A lot of fun stuff to unpack. Going to do it all for you again here this week. My name is Mark Longo from theoptionsinsider.com. As well as, of course, from the ever-exciting The Options Insider Radio Network. Come at you a little bit early here today because we thought we got lots of stuff popping off here. Want to get out there, get the content to you there. If you're listening live, of course, enjoy. If you listen after the fact, sit next. All the shows lined up there. Hopefully you're subscribed to the network by now. You're not just listening. We welcome all you new folks coming in. A lot of you flocking in to Crypto Rundown all the time from all sorts of far-flung regions across this here blue orb we all live on here. So that's always fun to see. Make sure if you haven't done so already, make sure you subscribe to the full network to get the whole kit and caboodle of great stuff. Maybe you don't know much about options. You want to learn. Boot Camp, Options Playbook Radio, great places for you to start. Maybe you're getting a little bit more savvy out there. Maybe you want to check out the option blog. Maybe you're getting on the high end, cutting edge. Maybe you're a pro out there. Volatility views, the advisor's option, a lot of good stuff for you, like futures options, TWIFO, a lot of great stuff out there for you guys to enjoy and sink your teeth into. 13 years worth of content. So, guys, get access to all of it there. The easiest place to get all that stuff, of course, actually is our mobile app that has all the way back. If you go to like iTunes or other places, you're going to limit how far back you can go. If you want to go deep, and these days people have a lot of time on their hands, they want to go deep. The mobile app, probably one of the easiest ways to get all of that good stuff. All right, speaking of good stuff, let's get to it with a little bit of the old Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the portion of the show where we break down what the heck is going on in the world's leading digital asset out there. Of course, talking about all things Bitcoin. Come into showtime. The bulls feeling a little bit better this week. We're up right about 80 handles from where we were last week, so not a huge move, at least net by any means, but it's certainly far cry from the massive sell-offs we've seen of late out there as well. A lot of folks doing a little hand-wringing over the weekend. Of course, it's not surprising. Bitcoin has been very volatile. We'll get to that in a little bit, how that vol is breaking down. We've seen a massive move, 10,000 on the upside not too long ago. Broke under 4,000 not that long ago as well. Very briefly, that was less than a month. We saw all those levels pretty much playing out. So folks, a little bit concerned. A lot of folks out there now looking at 5,800 as a key level out there. In fact, it bounced off that level this weekend, and also that level has been a key support in other times as well, going back all the way to the dark days of the VIX-ocalypse, Volmageddon, call it what you will, in February 2018. 5,800 was a key support level then. We also saw it a couple other times as well. So 5,800 has been a key level. Tested it again this weekend and rebounded off of that. So folks out there who like technicals, and a lot of you out there in the crypto space, do keep an eye on that 5,800 level. If we retest it again to the downside and break through, some folks out there thinking that perhaps might be a little bit more downside ahead before upside. But right now, it's all upside out there. Let's break down some of the stats, some of the vol, some of the volume, all that good stuff. Again, a lot of these numbers coming courtesy of our friends over there in SKEW land. Check them out, SKEW.com, SKEW.com. They got the new URL, which is a heck of a lot easier than the old one. If you did such a thing, you clicked on the Bitcoin options, you would see that the 30-day realized out there, which is, of course, the actual volatility that has been exhibited in the marketplace. That's nearly 200%, 197%. Again, that gets back to what a crazy month it has been, 10,000 to 4,000 and then back again in the middle. That's going to equate to about 200%, which is pretty much exactly where we were. 1 year, going out a whole year, it's still pretty darn volatile, 88%. Not a lot of assets out there you're going to look at have a 1 year realized volatility of 88%. You got to dig a little bit, and probably nowhere near as deep or as liquid or as sizable as something like a Bitcoin. So that's interesting in and of itself. You got to get probably some smaller equities and a few other names out there that are, your pharma names and things like that, your biotechs that are pretty volatile. Beyond those, not a lot. Let's see. 30-day implied, which is, of course, implied, listeners, is the actual level of volatility that the options are pricing in the marketplace. So not realized is what we've seen in the marketplace. Implied is kind of the market's best guess what's going to happen in the next 30 days. That's down a little bit, actually. It was 131%. It's actually come off a little bit, down to 99%. See a little bit of a rally, a little bit of a stabilization over the course of the past week, so maybe not entirely surprising. 99% still pretty darn volatile out there, so nowhere near the lows we've seen back, I think it was not this past year, but February or March of last year, I believe, where we saw that vol just kind of cranking down to the downside and hitting in the low 30s, I believe, in which case you can find a lot of assets that were much more volatile than Bitcoin. These days, not so much. Let's talk volume out there. The biggest venue still Deribit out there, and not a lot of paper, at least compared to the last couple of weeks out there over the course of this past week. The biggest day we saw out there in Deribit, again, this is not contract volume, this is notional. 64 million on the 27th. That was the biggest day. The 24th saw 52 million, and the 23rd, 47 million worth of notional. So decent volume, but nowhere near, certainly more than used to be our old barometer of about 30 million out there, but still not as active as it has been in the past. The biggest print we saw out there looks like a bit of I guess you can call it a funky collar/risk reversal. I don't have sides on this, so it's hard to kind of interpret, but it was on the 26th of March. We saw effectively 250 lots, so 300 total, of the April 5,500 puts, which is an interesting level. If you want to get some protection in there, or maybe want to do a bullish risk reversal, that gets back to a little bit shy of that 5,800 level we were talking about earlier. So kind of interesting there. We saw about 300 total of those going up for when Bitcoin was 66.62. We saw these going up for 0.0165 Bitcoin. I hate quoting things in fractional Bitcoin because it's not exactly an intuitive price level for the large swath of the audience. But c'est la vie. That's how these went up. 0.0165 Bitcoin out there. And at the same time, they did another 300, so 250 lots of the April 8,000 calls. So I guess this is probably a collar because it lines up pretty well. 5,500 to the downside. If you're breaking through 5,800, you might be a little bit worried about continued downsides. So 5,500, not a bad place to stop yourself out. And then they got on the call side, obviously going to be a little bit less, going to be 0.012 of a Bitcoin on the call side. So they didn't quite do a zero cost collar if they were going for a collar. They paid a little bit for this. And again, Bitcoin was all at 66.62 when that went up. Other big prints, not a ton out there. They were smaller. So that was kind of the largest aggregate print. And also kind of interesting. I could see an argument for a bullish risk reversal if you're feeling the love out there, but I think it's less of an argument than we're seeing for perhaps a little bit of concern to the downside, hence a little bit of a collar. You have a different interpretation? Write in, let us know. Kind of curious out there. Going out to what's been what's been printing out there of late. Not a lot. Like I said, there was the April 4,500 puts of the big prints out there today with a whopping 165 on Deribit. So not a lot really lighting it up. Today is SKEW. Remember, the more positive it is, it shows the puts more firmly in charge. It's up to 12% from 2.3% last week. So puts still firmly in charge. The call to put, obviously puts leading the dance out there. The calls are only 42% out there, so the puts still over half. It's about unched from where it was last week. It was 43% last week, 42% this week. So puts call ratio still pretty similar. OI, similar story to last week's been ticking down a little bit. It looks like it peaked back, just not that long ago. It looks like about a week ago. And then now it's kind of come off a little bit out in Deribit, which is still the biggest venue out there, 353 million outstanding. So a little bit off last week, but still decent amount. The max they've seen out there is close to $1 billion, 844 million, and they're averaging about 615 million worth of notional in their OI there. So not exactly high level right now. Not quite half of it, but not exactly lighting it up out there either. So again, we mentioned the end of March, the 27th, was pretty much the big contract for the last quarter. That's been the number one contract in terms of OI. So when that went off the board last week, not surprising, a lot of this OI went with it, and they haven't really replaced it yet. That makes a certain amount of sense out there. We're also seeing the number 2 venue out there. It's a bit of a tie now, pretty close. OKEX, still number 2, 28 million. LedgerX, number 3, hot on their heels, though, at 24 million. Again, both of those are pretty much half of what they were last week, going to show how much of that March 27th contract really dominated the tape. CME kind of picking up the rear there, 4.4 million, and then a distant afterthought is backed at 41,000. So not a lot of love there for the options on backside, and pretty light on CME as well. Again, combined across the months now that March is off the docket. The biggest combined OI month out there is going to be June. The contract expiring on the 26th. Has about 26,300 contracts net across all the venues. So it seems like they're moving quarterly. They went from March to June. Not exactly surprising out there. CME Bitcoin options, it's been kind of quiet. I think it's actually been literally still some of the sessions last week. We saw a couple of days, like the 23rd last Monday, where there was zero contracts going up, no volume at all. So not a good sign. I saw it again, obviously, recently. Of course, on the weekend it's closed as well, but still not exactly lighting it up. Today, actually looking a little bit better, about almost 500,000 worth of notional on the tape. That's still pretty meager, but compared to nothing, it's a heck of a lot more. The big recent high, if you're wondering, was back on the 24th of February, 2.4 million. Then we saw another spike of about 2.1 million worth of notional on the 9th of March. That's kind of really about it. It's kind of been not a heck of a lot going on out there outside of that. Futures, similar story, though, a little bit more paper on the CME. Today, pretty light, actually, about 4,000 contracts only. So not a lot. On the 26th, you saw 5,000, 25th, 6,000, 24th, 9,000, and about 9,700 on the 23rd. So decent paper, but again, nowhere near the 15, 18,000 plus they've been doing not that long ago. So volume kind of quiet on CME. Crypto land backed, same deal. Our old friend, the Backed Volume Bot, putting out there for their weekly summary. Total volume, 44 million. Max open interest, that's down 17%, by the way. Max open interest is 4.3 million. That's down 30%. Again, Backed has raised a ton of money. So waiting to see what all that money, when it's going to translate into a little bit of volume. Meanwhile, we're going to translate into some other products. It's time to head on into the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, welcome to the altcoin universe portion of the show where we break down everything outside of Bitcoin, except for this front part here where we talk about the market cap. Kind of hard to avoid Bitcoin in that conversation. Remember, take these market cap overall market value levels with a little bit grain of salt. Maybe a large grain of salt. Not sure how useful they are total numbers, but I think the rankings are still going to hold out. So those make a little bit more sense, a little bit more reliable there. Number 1, Bitcoin, 116 billion out there. Number 2, ETH, about 14.5 billion. Number 3, good old XRP, name that refuses to die, sells off, rallies. XRP at about 7.6 billion out there. And number 4, Tether. Tether firmly in the top 5 now, 4.6 billion out there as well. Number 5, Bitcoin Cash, a little bit north of 4 billion. Then we drop off Number 6, Bitcoin SV, 3 billion. Litecoin, number 7, Oh, How the Mighty Have Fallen, 2.5 billion. Number 8, EOS, about a little over 2 billion. Number 9, Binance Coin, 1.9 billion. And rounding out the top 10, good old Tezos, a little bit north of 1 billion. Let's go on out to ETH first. ETH, obviously, the number 2 overall crypto options market. ETH, a little bit of a rally over the course of the past week, up about 1.5 points. So compared to previous price swings, kind of a quiet net week for ETH out there. Let's break down some of the options activity. Again, this data coming from our friends over there in SKEW land. 30-day realized pretty much exactly unch still at a whopping, mind-altering 243%. So pretty volatile out there. But again, that's the realized. That's the actual volatility we've seen exhibited over the course of the past month, listeners. So ETH, pretty darn volatile, even more so than Bitcoin. A 30-day implied, that's down to about 115%. That's down from about 136%. So still very volatile, but down a little bit off last week's levels. A similar pattern to what we saw out there in Bitcoin as well. The ADV also coming back down. It got up to about 5 million not that long ago. Now it's down to about 3 million again. It was 3.9 million just last week. So the ADV has fallen off a little bit as we're seeing the ETH volume trickle off a little bit. Today, kind of quiet, 1.2 million on the tape. Friday, exactly 3 million, so right at that ADV. The big day was a week ago on the 23rd, 4.1 million total was the biggest day over the course of the past week. So again, way below the recent volume spikes where we were averaging north of 5 million notional out there. The SKEW, same deal as in Bitcoin, puts leading the dance even more firmly this week, up to about 7.8%. It was 1.3% last week, so more positive equals more put love out there. Again, same deal for the OI as well. March 27th was a big date out there. A lot of that rolled off the tape over the course of the past week. So OI down quite a bit. Right now it's a total of about 27 million. Got cut pretty much in half over the course of the past week. So a lot of that coming off. And they haven't really replaced March yet. Not surprising. Let's roll on out to Ripple. Ripple feeling a little bit of love again, up to about 17.3 cents, up about 1.5 cents or so from last week. So that's good news to the Ripple fans out there who were worried for a while there. Maybe it was threatening 10 cents to the downside. That was looking pretty dire. Not exactly the case out there right now. Bitcoin Cash up about $6 from last show, so kind of a quiet week for them net as well. Bitcoin SV actually taking a break, down a whopping $4 from where it was last week. All right, you guys got some questions. Let's get to them with a little bit of your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, let's get to some of your Qs. Hopefully we got some A's. Been loving your questions lately, all over the place. Last week we talked a lot about the legal side and all that fun. This week, let's see what you got on the docket for us. First up, I like this handle, PJ Sandwich. PJ Sandwich saying, hey, shouldn't it be PB&J? I'm not sure what a PJ, peanut butter, and just, I guess you got rid of the B. Just went PJ. Okay, I'm okay with it. He or she asking, it's the same question everyone's got. It's amazing. Do my options still exist if the exchange shuts down or if trading is halting? I think they meant halted. Can I close them out? You know, we've been dealing with this question a lot on the rest of our network. People have questions. These are usually about listed options that we're usually dealing with, things that are cleared by the OCC. So there is a set mandate, a set guideline for what the procedures are. And again, if you have those options, I tell you to check on out to the OCC website, go to their unscheduled market closings guide. Unfortunately, you don't really have that in the crypto landscape. When I say these are quote-unquote exchanges, they're kind of entities unto themselves. There really isn't a lot of regulation as to what they have to do or what they will do, and there is really no central counterparty backstopping those trades. So in the case of a listed option on, let's say, Apple, for example, you know, if the exchange halts, you still have that option. It's guaranteed by the Options Clearing Corp. So you can have that for the lifespan of that option. You can exercise that whenever you want, even if the underlying exchange is halted. And OCC will eventually determine a settlement value for it if the exchange never reopens in the lifespan of that option. So that's a nice little service you have. It's kind of what you're paying for out there. When it comes to venues like Deribit or BitMEX or others, it kind of varies depending on the venue and their bylaws and whether you think they're even going to be around to reopen and relist if it's one of these smaller venues. We've seen quite a few of those smaller venues go under for a variety of reasons. And that's a big question out there. So unfortunately, I don't have a guide to send you to on the crypto space outside of CME. CME is going to self-clear, and they will backstop those trades, and they will stand behind those ones, so you can't exercise those. Again, not a lot of paper going up out there, so not a lot of you taking advantage of that, but you can do that on the CME ones. Outside of that, maybe we'll do a rundown of the biggest venues out there like Deribit and others and see what their policies are. If they are indeed halted, what will happen to these options, what you can do with them, what your rights, what your options, pun intended, are if you are stuck holding the bag on these things. But again, with the lack of really a central counterparty, which is central to the entire ethos of crypto, I get it. But with the lack of that, you're going to lack certain other backstops as well that you're going to have on a listed contract. So short answer, Mr. PJ Sandwich, is it depends on the venue you're trading them on and what the actual specs are. And so I would encourage anyone who's out there who has this issue, has this question, contact wherever you're trading them and say, hey, what happens if this happens? Do you have a guide for this? Do you have a system in place? And then hope that that venue is still around. I'm thinking bigger ones like a Deribit probably will be able to weather the storm. Small one, maybe not. So maybe an argument to stay a little bit larger, a little bit more liquid in times like this. But yeah, unfortunately, PJ Sandwich, there is no one answer that fits all on the crypto side, which again, it's kind of what crypto's for, right? So kind of get the good and the bad with that. Let's see. Sweet Baby Ray. Good handles today. A lot of food-related one. Making me hungry here. Sweet Baby Ray wants to know, why does everyone quote... this guy's right up my alley here. Why does everyone quote notional and crypto options? Why can't I get a contract count? I am so with you, Mr. Baby Ray here. By the way, I love your hot sauce or your barbecue sauce. It's delicious. But why does... Yeah, I don't get it either. I hate it. I think it's terrible. It throws me off all the time. I'm always thinking contract counts in my head because that's the way options are usually disseminated and quoted. So these crypto venues, and the reason why is pretty clear. Most of them don't have a lot of volume. So it sounds a lot cooler to say we did 300,000 in notional than it says we did 5 contracts. That just sounds a lot cooler. So that's why they do it. It sounds more official, sounds more substantive than just 10 contracts, 27 contracts. I think once we have some more venues out there doing a decent amount of paper, I think we'll see that trend start to shift. Once CME starts doing more paper, I know they're going to start doing it. So just a matter of time, I think, and a little bit more awareness, a little bit more volume out there. Then hopefully we'll see more people out there like me and you, Mr. Sweet Baby Ray, who want these actual contract counts. Like right now, if you want to do what CME contracts are, you got to really dig. I quoted a notional number today. I don't even know how many contracts. I'm going to guess it's not a lot, but I have to dig even further to see how many contracts that actually is, and that's annoying. I think that's kind of it's a little obfuscation between you and what the actual volume is. I don't like it. Get the numbers out there, make it free and easily available for everyone. Stop throwing this notional nonsense around. I think everyone will be better off for it. There you go. That's the end of my little soapbox here. NLCC. Have you heard of any new exchanges entering the crypto options market? Well, the most recent entrant is really the OK exchange. They seem like they're doing decent paper. I mentioned it earlier. They're looking at a pretty firm number 2 overall out there in net open interest. They've usurped LedgerX, which is kind of interesting. LedgerX making a lot of headlines for a while. They, of course, have been on this program. Go check out that episode if you haven't already. But OKEX quietly kind of coming in and stealing a little bit of thunder and becoming the number 2. So that's a pretty recent entrant. Outside of that, no. But I don't know how many more do you need right now. We need to get some more volume on the ones we have first. I'm kind of okay with not seeing a lot of new entrants diving into the space saying, yeah, we're yet another crypto options venue that's going to do, 4 contracts a day. We don't need that. We need venues doing more volume right now. Then we could look for more people coming in. Just splitting up and carving up an already anemic market doesn't really suit anybody. All right, last up here we got Jack. Interesting question. He says, you always say 2 to 3% is a good estimated expense range for portfolio protection in major indices. And yes, I do say that. Check out some of our other programs like the Advisor's Option for a more detailed breakdown of what that number means. He goes on to write, does that also hold true for Bitcoin, or should we realistically expect to pay more? Thank you very much for producing this program. No one else is out there talking about this stuff. We need more voices like yours. Well, thank you very much, Mr. Jack, and everyone else who's echoed those sentiments and who is enjoying our content. And a lot of you have a lot of time on your hands of late, and we're working very hard and diligently behind the scenes to make sure you have content to inform you, to educate you, to hopefully entertain you a little bit, walk you off the ledge a little bit out there as well. But it's a good question, Jack. And it's quite frankly not one I've really stopped and considered that much in the crypto space. That number is kind of pretty firm in the equity options landscape. Usually I hold it for the broad indices. It doesn't always hold true on the individual equities because their SKEWs and their setups are going to be a little bit different, but that's a good ballpark number. You want to protect, let's say, your broad SPY portfolio. How much should you pay for a reasonable amount of a protection? Obviously not right now because nothing's reasonable right now. You're going to pay a lot more than 2 to 3%, but that's why you do it before these things happened. But in the crypto space, yeah, I think it is realistic to expect to pay more. I don't have a firm handle. That's a good, maybe a good little homework assignment to parse what a realistic number is. Also talk to some fund managers and some of the OTC guys putting up these options to see kind of what levels and what ranges they're encountering to see what really is a ballpark number for the crypto space. But I'm going to go out on a limb and say maybe just borderline expect to double that just because things are much less liquid out there. No size really to be found in a lot of these venues out there. So that's going to make things more challenging. So spreads are going to be wider, not as easy to get in to a 5% out of the money 3-month put as it is in SPY, for example. So that's going to have a literal cost in this case, and it's probably going to be, again, conservatively, I'm just guesstimating right now, conservatively maybe double, which is expensive. You're talking 5 or 6% now. That's a pretty expensive amount to pay, and that's why you got some firms out there who are specialized. We had the guys out here from Drawbridge on not too long ago. They're putting together collars and things. That's been a good question for them. Next time I have them on, I'm going to ask them, see exactly what they're legging into as an effective kind of percentage rate to pay for that protection out there. And they may take issue with that. They may say, hey, we can do better than that, and then hopefully they can. But in general, it's going to be, I think it's a reasonable expectation to have to pay more because we're just not seeing, unfortunately, yet enough volume out there in the crypto options market. All right, everybody. That theme music means, unfortunately, we come to the end of this nice little crypto quick hit. Want to get you in, want to get you informed, get you on about your business out here. If you like what you're listening to, make sure, if you haven't done so already, subscribe to the full network. Get the whole dozen or so programs that we do. Talking about the option block, talking about volatility views, talking about TWIFO, talking about the advisor's option, OPR, all that good stuff. I'm sure I'm forgetting a bunch. Check them out. The Options Insider. Wherever you find your favorite podcast, we're there. Subscribe to the full network so you don't have to worry about missing anything. And I guarantee you, we will keep you busy and hopefully informed, enlightened, entertained, all that good stuff. And, of course, stay safe out there. These are challenging times for everyone. So stay safe, stay isolated, stay at home. Listen to our stuff if you want to. If you find value in it, by all means, keep enjoying it. We hope we're putting good stuff out there for you. And we'll see you back here later this week. We've got OPR coming up. We got a bunch of other good shows coming back. We got, of course, TWIFO and Option Block on Thursday. Vol Views on Friday. Probably some more stuff scattered in there in between. So we'll see you back here soon. Stay safe. And, of course, we'll see you back next Monday for more The Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.